I'm going to briefly discuss what is happening with Bitcoin on a big picture. In this video, it's not going to be specifically about trading on the intraday timeframes. We'll give it a higher level macro discussion and about a very serious topic, right, related to Bitcoin. And that topic is Bitcoin whales will steal your wealth. Now, what do I mean by that? And do I mean they're going to get your secret recovery phrases or your seed phrases and or your passwords for your wallets and log in and get your funds moved over to their account that way? No, I don't mean that at all. Right? There's great security on the blockchain. The network is practically unbreakable for most people and computers that exist, or if not all. At some point, of course, the algorithm will fail because cryptography is designed that way. Right? At some point, all cryptographic signature-based algorithms do fail, and that is why you have replacement algorithms ready to implement once those actually break. Right? That's kind of the idea of cryptographic communications. It is meant to be very secure, and at some point it is also designed to fail. I know that could be a little bit of a mind bender, like, wait a minute, why do you say it's secure if it's designed to fail? Well, cryptographic signatures are designed to be strong by being weak. If that makes sense to you, then you probably understand how it works. If you don't get why that works, well, it's the idea of being strong by having a system that is actually quite delicate over time and can easily be replaced, as opposed to having a very, right, so it's like a strategically flexible system, as opposed to having a very sturdy construction that is very resistant to attempts to break it, but once it breaks, the entire tree trunk breaks, and you have quite a bit of a difficult time replacing it. So cryptographically, Bitcoin is very strong for precisely that reason. And yes, there are algorithms that exist to replace the existing SHA-256 algorithm, whenever it breaks. But that is not how the whales are going to steal your money, right? They're not going to, usually people who have a fantastic amount of wealth are not going to break laws to steal your wealth, at least not in such an overt and frankly petty way, right? People who have hundreds of millions or billions of dollars are not really interested in trying to steal into your, break their way into your account with $5, $10, $50, $100,000 to steal your funds, right? I mean, maybe there are some insane people who think that that's worthwhile, but that's not the real threat to the average retail investor or holder of Bitcoin or any asset, really. The real threat is that the whales who own the vast overwhelming supply, they own 91% of the max supply of Bitcoin, is already owned by people who have 1,000 or more Bitcoins in a single wallet, right? So they have many wallets usually. And 95% or more of the max supply is owned by people who already have 100 or more Bitcoin in a wallet, right? Which means people who have 99.9 Bitcoin are not included in that list. And if you have 99.9 Bitcoin, are you a whale? Well, technically no, but you have a lot of assets compared to most people. Yeah, absolutely. Most people don't have anything near 99 Bitcoins worth of money. If every Bitcoin is worth around 73, 74, 75K right now, you can just call it 70, right? 70 times just under 100, that's like $7 million or whatever it is, right? So, no, sorry. Yeah, it's like $7 million, right? So, most people don't have $7 million, obviously, even if you include their house and their car and all the assets they have, right? They don't have that much. Maybe in some years' time they will, because the depreciation of the dollar will drop so much further with additional inflation over the years, that the steady depreciation of the dollar's purchasing power will make it so that $7 million in another 10 years will be like $1 million today. And most people don't actually have $1 million today, because most people don't own their own homes. Well, you could say, well, in the US, most families own a home. Well, first of all, that's changing rapidly, and soon the majority of Americans will not own their own homes. And the only ones that really will are those that are fortunate enough to have high enough income to buy one, or who inherit one, right? Which is going to be a lot of people in the next 20, 30 years as the current owners age out and distribute their wealth to their offspring. But the thing is, usually if families have 2 or 3 children and they own one home, then that home will typically get sold off once the parents, depart, because who's going to want to, between the 2 or 3 or 4 kids, who is going to get the home? And are they going to keep it in the family, or are they going to sell it off and split the profits? Typically, they'll sell it off and split the profits, and think they're being smart by doing that. Whether they are or they aren't is a very different story. But the whales in general, who are working day and night to steal your wealth, are doing it through very simple, you want to call it market manipulation, you can, but a very simple process of buying low and selling high, which is what you're supposed to do in any market if you intend to make money from that market, right? The whole point of investing is to buy low and sell high. And the folks who do that well and are considered the so-called smart money, they know exactly how to buy low and sell high. And they do it using the VEPS information that we tell you about over at Alpha Trading on a regular basis. The question is whether or not you actually will do that yourself to protect your assets and make sure that those who have all the money they need are not able to just take your assets with ease, because currently people like you are allowing them to do it because you don't know how to trade with the VEPS, right? You're actively ignoring that information. You're basically saying, smart money will always win and retail traders will always lose, so what's the point of playing? Well, that's a good question. If you don't learn how to use the relevant math that the smart money is using to win most of their trades and to take your money, what is the point? You're better off sitting it out and just dollar cost averaging, which is actually not a bad idea, right? It's actually a wise strategy relatively over time to dollar cost average and then just hold your assets. And the problem is people get paper hands, as they call it. They become scared when there's actual volatility in the market because they are scared of not knowing what the assets are actually going to do when they see a price drop. So they'll sell after the price has already dropped significantly, as opposed to buying when it's low, right, and then selling when it reaches a crazy high. And because they do that on a regular basis, and the smart money does the opposite, they buy low and sell high, and the dumb money buys high and sells low, right? Because the dumb money buys when they see everybody else on the bandwagon, and they want to get a piece of that action, even if they miss most of the move or all of it. Right? So they buy the tops, and they think they're smart, even if they're not leveraging. They're like, oh, I bought in, I'm with the rally, let's go. And then, of course, it turns around after the distribution, it mean reverts. And everybody's like, oh no, it's going down. What happened? I just bought it, and now it's going down again. Yeah, you just bought it and it's going down because you're not aware of things like mean reversion, right? That are based on returns. You think mean reversion is based on price. It's not, right? Price does not mean revert per se. Price, if anything, just follows the returns. It's the returns that mean revert, not the price. So if you see a price on an asset going up like crazy, you probably already missed the move to the upside. So what should you do? Should you buy in right away? Probably not. You should probably wait for that asset to have another occurrence of opportunity, whether it's to the downside as it mean reverts, or maybe it just keeps continuing to the upside, it's having a good run. But until you actually see the occurrence of opportunity, you don't just jump in and jump on the bandwagon when it's already gone up significantly, right? If you see the price drop significantly, should you sell? Not if you can avoid it, right? You should probably see that as an opportunity to buy if the returns have dropped off significantly and are about to turn around and start going back up. How can you know this? Again, like I said, you can know this by learning how to use volatility, entropy, probabilities, and statistics. Well, how can you do that? Well, you can do that by getting the free tools from Alpha Trading. Just go to alphatradinghq.com/discord. And there you can see for yourself how to do that. You can get free tools to learn how to trade volatility, probability, statistics. And yeah, you can get all the access to the information you need to learn how to do that. You get access to the chats with the real traders who use the VEPs every day. And of course, you can join the Discord's live stream, which happens Monday through Friday, starting at 9 a.m. U.S. Eastern Time. And you can join the chat, the live stream by text chat and also by voice. You can join with voice. The whole point of the live streams is to be an educational experience, not just to tell you what the market did. Yeah, we quickly surmise what the market has done, but like for like a minute or two, because it's not about who cares what the market has done. We just show you, yeah, look, it hit these targets that we gave you yesterday, right? And we show you when it hit it, etc. But then we show you what it's going to do most probably on the current day, right? Why? Because people don't care about what happened yesterday. They're not going to trade what happened yesterday. They can't, right? They want to know what's going to happen next. Well, we don't give you signals. We give you probabilities to the upside and the downside, and we show you why it's likely to do that. And then you can often see even during the live stream, because of the time that the live stream happens to be, right around market open, traditional market open, you can very often see those targets being hit even during that first hour in real time. So yeah, that's how you can learn. That's how you can join. That's how you can join in on the fun and learn from real VEPs traders like me and my fellow Alpha Trading co-founders, including Bilbo, who does a lot of the talking and shows the workflow and gives you a rundown of his analysis on the day in the live streams. And I share a lot of my thoughts as well. And also in the chat, we share our charts and thoughts and analyses in there. And there's a reason that we hit our targets the vast, overwhelming majority of the time. Right? It's not because we have some crystal ball. It's because we use the VEPs tools that we have, and those VEPs tools help you understand real market dynamics and make real smart money decisions better than using lagging indicators like what you have in traditional technical voodoo TA, or technical TA that I call voodoo TA. Anyway, so that's going to do it, and I'll speak with you guys later. Hopefully you won't get yourself into a situation where the whales will take your Bitcoin and steal your wealth, because believe me, even if you have a relatively small account, if you're trading on an exchange and you're using leverage, you are a target for those exchanges and for those whales, and they'll do anything and everything that they can to get your Bitcoin, no matter how little you think you have, right? If you think you don't have a big enough account for them to care, believe me, they care. And they're going to get it if you let them. So don't let them. Come and learn a better way to trade it Alpha Trading. I'll see you guys later. Cheers.